Hi everyone, this is Caroline Peel, one of the managing partners at Timewise Financial. In the spirit of me being 37 weeks pregnant, I am going to talk about Trump accounts. Who they're for, what type of investment accounts they are, how to open one, how they work, and what the tax treatment is. So what is a Trump account? A Trump account is a federally created, tax-deferred investment account for kids under the age of 18. It was created last year by the One Big Beautiful Bill and was signed into law on July 4th, 2025. Think of it like a custodial IRA for kids. It's owned by the child and it's managed by a parent or guardian until that child turns 18. So who is a Trump account for? Technically, any U.S. citizen under the age of 18 can open a Trump account as long as they have a Social Security number. But there are actually some instances where the government will deposit money into your Trump account. And that is if you're born between January 1st, 2025 through December 31st of 2028, then the U.S. government will deposit $1,000 into that person's Trump account. If your child is 10 years or younger and was born before 2025 and they live in a zip code that has a median income of below $150,000, then the Dell Foundation may donate up to $250 to that account. And if your child doesn't qualify for any of those seed deposits, they can still have a Trump account. You just have to start funding it from zero and you would fund it yourself. So let's say you qualify for a Trump account. How do you actually sign up for one? So for starters, you have to file IRS Form 4547, either with your 2025 tax return or any time before the account is opened. You can also register online at trumpaccounts.gov starting in the middle of this year. All accounts initially created and held with the U.S. Treasury's designated financial agent, which is BNY Mellon, and then later you will be able to roll over that account balance to other brokerages like Avantax, like Cetera, but for right now it's all funneling through BNY Mellon. And this election must be made before January 1st, before the child turns 18. So how do Trump accounts actually work? Once the account is open, parents, grandparents, families, friends, they can all contribute to someone's Trump account up to $5,000 per year. And that's per Social Security. So one Trump account can have $5,000 worth of contributions in total from various people. And the government seed money, if you qualify for that free $1,000, does not count against that $5,000 limit. There's also another benefit where some employers are contributing to Trump accounts up to $2,500 per year, and that is also not considered taxable income to you or to your child, but it does count towards that $5,000 annual contribution. You do not have to have earned income, which is a big difference between a normal IRA and the Trump account. So you can start contributing the day that your child or grandchild is born. All of the funds that are available within Trump accounts are low-cost index funds in the U.S. So think of S&P 500 type of ETFs, and you cannot take any money out before age 18. So no withdrawals before age 18. And then once the child turns 18, they then take full control over the account, and the account turns into a traditional IRA, which is subject to the standard IRA withdrawal rules. So let's talk about the tax treatment of the Trump accounts. Contributions from family members are made with after-tax dollars. So money in the bank account, you've already paid taxes on that, you can contribute that to a Trump account. They are not tax deductible when you contribute money to a Trump account. However, these contributions do create basis, meaning that you won't be double taxed on the amount that you put in. Government and any charitable deposits that are made do not create basis, so that money will be taxed when it eventually comes out of the account. Employer contributions are not taxable income to the employee or the child, but they also don't create basis, so that money will be taxed when it comes out later on. All of the growth inside of a Trump account is tax deferred, meaning that there's no tax year to year as it grows. But when your child eventually withdraws the money, those distributions are taxed at ordinary income, right? So it's not taxed at your lower capital gains rate, it's taxed at ordinary income, just like an IRA distribution would be. Early withdrawals after the age of 18 for non-qualified purposes are subject to a 10% penalty, just like any IRA distribution is. If it's not a qualified distribution, unless it is for approved expenses like college tuition or a first-time home purchase. So there's not the ultimate amount of flexibility with this money. There are quite a few restrictions on not being able to take money out. So what's the bottom line? If your child, your grandchild, or someone that you know qualifies for the $1,000 government seed or the $250 gift from the Dell Foundation, there is no financial downside to opening a Trump account. Even if you never add another dollar, it's free money that will be invested that will grow over time. But beyond that free seed money, whether you should actively contribute depends on your goals, your tax situation, and your comfort with a child controlling the funds at age 18. So my recommendation is don't treat this as an either or. For most families, a Trump account and a 529 plan can work together, one for flexibility and long-term wealth, and the other for tax-free education savings. And because Trump accounts are brand new, there is still some uncertainty around state tax treatment and financial aid impact. So we recommend you reach out to us and we'll be able to build a strategy that makes sense for you and your family.